Hello and welcome to EdSpace, where we discuss some of the week's top news headlines with Mint's editor, Sukumar Ranganathan. Welcome to the show, Sukumar. The RBI credit policy. What kind of a message does it send to the government and to the investor?
I think it sends a very, very caveated, considered sort of message. It is in some ways a response to everything that the government has done so far, and also the kind of direction the government has indicated it's going to take as far as fiscal consolidation is concerned. But it's also in some ways a sign that more needs to be done. It is a little hawkish in tone, much like yesterday's macroeconomic policy was hawkish in tone. And given the overall state of the economy and where we see it going in the next year at least, that's not entirely surprising. Inflationary pressures aren't totally out of the equation yet, and that has always been a primary concern for RBI. And in many ways, the market had factored this in, which explains the reaction of the markets after the policy came out. As soon as the policy came out, there was a dip and it went down, and the reason for that was everyone was sort of expecting a little bit more. Whatever he announced to the T had been discounted by the markets. So it's a caveated measure, and it needs to be seen in that light. It'll be interesting to see how the government reacts to it, because the government, I think, will probably do more, but it will also think, and looking at how various people in the government have responded to past policies of the government and what they've done, I do have a feeling that the government probably expected RBI to do more. Right, so there will be that tinge of disappointment, but it'll be interesting to see what the government does now, because you have to really consolidate the fisc, and that is a primary concern for the government. And if the government does that in a more aggressive way, I have a feeling that the Reserve Bank will reciprocate.
One of the other headlines for the week was, the CCEA clearing the IKEA foreign direct investment proposal. Now, for many people, it was a test case. So what is your take on how it has been cleared? And it's taken a long time.
Yes, it's taken a long time. It wasn't easy. The first one is always difficult. And it's always difficult in some ways. The first big one is always difficult because, there have been a few small ones. But it was always difficult, always going to be difficult, because you don't know what's right, you don't know what's wrong. You sort of, all you have is a broad principle to go by, saying we will allow this. But once you get down to the nitty-gritty, once you get down to the details, you'll have to see what is allowed, what is not allowed, and how things are going to work. So it obviously takes time. It sends out, definitely sends out a positive signal. Will the floodgates open? I don't think so. It's not as if people are going to jump in. But will we see more applications? Definitely, we will. And so from that perspective, I think it's a milestone. And in many cases, people do remember these milestones. Saying that this was the first really big instance of a foreign direct investment in retail being cleared by the government, and I think it's a good move from that perspective. Also sends out the right kind of message to foreign companies, to foreign investors, about the intent of this government.
The Carrefours and...
Yeah, exactly. I'm not saying they're all going to queue up and come in tomorrow, but they will look at India with a little bit more of interest. I think the more cautious companies will obviously wait and watch and see how IKEA's experience is as it rolls out its network, because the states also have to play a part. I'm sure you remember what happened in Uttar Pradesh when Mayawati was the chief minister, and there were protests against retail, and a few Reliance outlets were torched. So there is always that worry that some of this may sort of grow into a law and order problem, with some politicians sort of fanning the flames, which is what clearly happened in Uttar Pradesh. So a lot of investors will be waiting and watching, but I think it's a seriously positive step that's happened.
Airtel Q4 results. Now, this I believe is the 13th consecutive, quarter where the results have shown a dip in net profit. Is there a turnaround expected? Why is it happening like this? The net profit falling.
See, there's a fundamental principle to this, okay? And the fundamental principle is people speak of the great Indian telecommunications boom and of how good it is for customers and everything else. And the minute someone speaks of boom and how good it is for customers, you'll find that the companies don't usually do very well. In this case, there are 3 or 4 reasons. First reason, increased competition that threw rates into a tizzy, which they've corrected to some extent. Falling usage, which again has been corrected to some extent. Big bets made in Africa, which will take some time to pay off. Regulatory uncertainty, where your guess is as good as mine. Companies don't know what's going to happen. Bharati itself is involved in several disputes, several tax cases. You don't know what is going to happen simply because the regulations are fluid. There are payments that they have to make to the exchequer. There's a one-time payment, and over which there's still some uncertainty. And then, of course, there's the 800-pound gorilla, which is waiting to enter the business, which is really Reliance. So it's just so much uncertainty. And I just think you will have to give them time. I'm not saying this just for Bharti. I'm saying this for any company that finds itself in a situation like this. You are not going to see an improvement quarter on quarter on quarter. I think it's going to be a far more gradual process as these things work out. From the long-term perspective, I think any analyst would be foolish to write off India's largest mobile phone company, right? In a market as large as India, if you are the market leader in mobile telephony, you just can't be written off. I think in some ways, it's just like Hindustan Unilever Limited, right? 4.5 years ago, investors really looked on the stock as a complete underperformer. The company had all sorts of problems. But you just can't write off a company like that which serves customers in as large a market in India with products like soaps and shampoos and basic foods and things like that. And that's been proved right. So I think what we are going to see over the next few years is, I think the regulatory scenario will change, will become clearer. Competition will be there, but I also think there will be consolidation, there will be new partnerships. Higher order needs will emerge among the customers. People will start using more data. These people will be willing to pay more for the usage of data. But all this is also, but the ability of the company to leverage all this is also contingent on its own ability to correct whatever is wrong within itself. Are there operational lapses? Is innovation suffering? As the outsourcing model worked for them, because they outsourced a lot of their things and their functions. So they'll have to answer these questions. They'll have to see what really ails them. My sense from where all of us are sitting, which is on the outside, is I don't think something is really fundamentally wrong with this company. So things should, I guess, improve. And that's pretty much what we've also said, that there is a turnaround that's happening and it's going to take some time. But it will turn around. It's not a basket case.
So there is a turnaround which is around the corner.
I don't know whether it's around the corner. It's like, turnarounds don't necessarily have to be around the corner. They could be 4 years in the future.
Okay. So a turnaround which is happening, which will happen. Sukumar, thank you very much for being with us. That's all we have for you today. Thanks for watching and please stay tuned for more.